hey, are you looking to create a set of financial projections for an existing business? And maybe you have good historical financial data that you want to use as a baseline to help you forecast and project out into the future. Well, if so, you've come to the right place, because we have created a financial projection template built specifically for existing businesses. And I'm going to walk you through how to use this template and fill it out today. I put a link in the description of the video below to this template, so you can go down and grab the template. And while you're there, it'd be great if you gave us a thumbs up on the video and subscribe to our channel. We're trying to build out a number of tools, useful tools for entrepreneurs, and so helping us get the word out would be awesome. So before I dive too far into the template here, a little bit about me. My name's Adam Hoeksema. I'm the co-founder of Projection Hub, and over the last decade, we've helped 50,000 entrepreneurs create financial projections for potential investors and lenders and all sorts of different industries. We have a library of about 70 different industry-specific financial projection templates, and most often those are used for startups or when you're kind of building projections from the ground up and you don't have that historical data. But a lot of times our clients have good, reliable historical financial data. So we wanted to build a template that would allow them to use that as the baseline to project from instead of really building kind of from the ground up. So now if you want an industry-specific template, you could go check out our library of templates and find it industry-specific and maybe even compare it to this existing business template here today. So with that, let me go ahead and dive in. Okay, so we're going to start here kind of with the end in mind. So this is our at a glance tab that will show you kind of the deliverable here. So you'll get a profit and loss at a glance. You can see some different charts and graphs that you'll be able to produce once you complete the projections. You'll also get a 5-year income statement summary, 5-year cash flow summary, a 5-year balance sheet summary, and then you'll get the income statement, cash flow, and balance sheet all broken down by month for each of the 5 years. But we have a little bit of work in order to get there. So I'm going to walk you through how to fill this out. So we come back to the Input Assumptions tab. We'll see a number of cells here that are highlighted in blue. And any cell that's highlighted in blue is an assumption tab cell that you can change without breaking something in the model. So we can say what projection start year do we want and month. And then we can basically add our existing balance sheet. So take your balance sheet for the existing business and start entering in the different data points here. So we've got accounts receivable, we've got inventory, we've got accounts payable. This estimated days sales outstanding. So what this means when we say 30, that means it's going to take you, you're estimating it's going to take you 30 days to collect those receivables. And projected inventory carried as a percentage of total sales. So this is when we put in 500%, what that means is that you have 5 times the amount of inventory that you sell each month. You have 5 months worth of inventory on hand is basically what that means. So some businesses carry a lot of inventory and some carry very little inventory. And so you may want to adjust that, or you will want to adjust that based on your specific situation. And then we've got our accounts payable. We say, hey, we're going to pay off our accounts payable on average every 10 days. All right, now you can enter in the existing fixed assets. So again, you take your balance sheet and you find, if you have a building or equipment or furniture, or maybe you're a restaurant and you have glassware, you can enter in specific line items from your existing balance sheet. And then this is a projection. So we may be looking to do things out in the future, maybe a new project, a new arm of the business, a new portion of it. Maybe you're expanding the physical space of the business. And so maybe a new building or new equipment. So you can add in those future purchases, buildings, fixed assets in this section here. Now you might have a number of current loans on the balance sheet, so you can add your current loans. You can also add future loans. And then you can add any additional investment that you're projecting in the future that you will bring in additional investment. All right, so now we can get into the revenue section. So what you'll do here is you can put in the different categories of revenue. So this could be examples of categories of revenue could be, let's say you're a software business, but you also sell consulting services. So you might have 2 categories, your software revenue and your consulting revenue. So you can enter in different categories, and then here you'll put in your specific line items of revenue. So in that, if we keep following that same example, if you had a software business, you could have software revenue as a category, but maybe you have 3 different levels or types of software, and you could add those 3 specific software levels here as specific line items. And then same thing with the consulting. And then you'll just categorize them as software revenue or consulting revenue. So we've just entered in some example kind of data here, and then you're able to put in the last 5 years, 5 full years of historical financials, so revenue for each of those line items. And then what you can also do is put in revenue for the current year. So whatever year you're actually in, how many months of data do you actually have? And then, so we say, hey, we have 3 months of data, and this is our sales level for over those 3 months for each line item. And now this gives us a whole bunch of options to be able to kind of set a base, set that base that we want to forecast from or project from in the future for each of our revenue line items. So for each revenue line item, we can say, hey, do we want to annualize the current year? Should that be the base? Or do we want to average the current year and last year, average the current year and the last 2 or 3 or 4 or 5 years? So we can go up to averaging the last 5 years to kind of create that base. And then what we'll be able to do, once we have a base number of revenue, we can project to increase or maybe decrease by a percentage. So if we think, okay, we're going to annualize the current year, and then we're going to increase it next year by 50%. So that's what this would allow us to do. Now, so let's say we're going to average the current year and last year, and then we're going to increase it by 5%. Now, you also have the ability, you could make this a negative. So if you think a certain revenue line item is going to decrease, you could put in a negative here as well. Now there's one more option. We have the ability to do a manual entry. So let's say you're like, well, I don't really know what the base should be, or the historical financials don't provide a good base. I just know that next year we're going to do $6,000, and so I select manual entry, and then I just set $6,000. I just put that in manually. So then that will allow us to have our 2023 predicted revenue, and from there, so this is kind of our base, right? And then we can say, okay, we're going to increase that in 2024 by 5%. Or again, you have the ability in any of these, the enter 2024 data, we've got over here enter 2025 data. So in these columns, you have the ability to put in a positive percentage to increase it, a negative percentage to decrease the sales, or a specific dollar amount. So in this example, we said, well, we just know, okay, this is rent for unit B. We just know rent is going to be $36,000. It's a fixed dollar amount. We don't need to put in a percentage. We'll just set it at $36,000. And so you can do either option there. And then from there, you're just doing that for each of the projection years out through 2027. Now, I'll let you just see this real quick. This is optional. It says optional right here, but this is the current year monthly detail. So if you wanted to put in the monthly detail of the current year instead of, in this example, we said, okay, the first 3 months, this is the total revenue for the first 3 months of the year. If you want to put in the actual current year month by month detail, you could do that. All right, so then based on entering in those assumptions, you're going to have your projected revenue down here below. All right, now for our expenses, we're going to have to follow a similar process. The first thing we're going to look at here, so income tax. Now, for most small businesses, if you're an LLC or a type of business where the income really passes through to the owners, and the business itself is not paying income tax, then you'll just want to put 0 in here. But if you are a corporation, maybe where the business itself is actually paying an income tax, you'll want to put in that percentage here. All right, now for our expenses, we have cost of goods sold and operating expenses. So for cost of goods sold, we can say direct materials, direct labor, and other direct costs. We can categorize them as inventory or labor or other. And then for operating expenses, here we're just creating the category. So examples, maybe a better example for operating expense categories could be the high level categories like sales and marketing, general and admin, and research and development. Could be the 3 kind of overarching expense categories. Okay, so with our expense categories put together now, we can come down here where we can add our specific expense line items. And we really give you the ability to kind of go crazy with this. You can add as many expense line items as your heart's desires. So you can really add rows here, down here by clicking these little plus signs. Well, each time you click one, it'll add 10 more rows of additional expense line items. So you could add nearly 100 line items, I think, of specific expenses if you want to. Now you enter in these prior year, expense line items, put them in their categories, and then put in the historical dollar amounts for those expenses. you can again add current year data. So if you have 3 months, for example, worth of data for 2023, put in three for the months, and then put in your total amount for those 3 months of those expenses. And then again, we're going to do a similar thing where we can say, hey, we're going to, how are we going to create that base? We're going to create it by annualizing the current year, or averaging current year with past years, or averaging different sets of years, right? So that will allow you to kind of figure out what that base is that you want to project off of, and then you can increase or decrease from there. You can also put in a manual amount for expenses as well. And then there's one, this kind of creates your base right here. So here's your 2023 predicted expense, but we added in a little bit more complexity here, but I think it's pretty valuable. So let me explain how this works. So if you have an expense line item that is really tied to revenue, and maybe a particular revenue line item. So as an example, that could be credit card processing fees. Credit card processing fees are, roughly between 2 and 3% of whatever amount has been processed by that credit card. And so it might be that on average, your 2% of your revenue should be credit card processing fees. You would not want to project that expense line item just as a percent or increase or decrease from the prior year. You'd want to make sure that it is tied to revenue. And so what you could do here is you can say, I want this expense line item to be a percent of revenue. And you can pick which revenue line item. So you could pick total revenue, or you could pick a certain segment of revenue. So maybe it's only this line item of revenue is the only one that you allow credit card purchases for. So you could pick just that line item. But if we said, okay, it's going to be a percentage of total revenue, and then what this does, it gives you context. So it says last full year, 2022, for this particular line item, it was 3.36% of total revenue. And so what you can do then is enter in your projection. So we say, hey, we're going to bring that down to, not 200, 2% of total revenue. And that way this expense will scale and stay in line with your revenue projection. So if you triple revenue, you want to make sure that your credit card processing fees follow along with that. And there could be many other expenses that kind of scale along with revenue. So you want to do that. If you have an expense that you say this is kind of unrelated to revenue, then it could just be a percent increase or decrease. And so we'll say, okay, this line item is just going to be a percent increase from the base. Here's the base of 3,550. We're going to increase it by 4%. So here's what we're going to increase it by in 2024. We're going to increase it by 4%. So you can see here it went up to 3,692, which is 4% more than 3,550. And you can continue to do that throughout the model. Now, if you want to, again, just manually put in a dollar amount, what you can do is just put in, so let's say we know this one is just going to be $5,000 for the year. Just type in 5,000 and you can kind of do that manual override there. And then this will kind of bring us back into allowing you to do percent increase here. Okay, so that is how you'll enter in your operating expenses. Now there's one more section down here that I want to show you, is our salaries section. So you could be putting salary expenses up here, and maybe they're just kind of all bundled together in your marketing team costs. You might put marketing team and put the whole team salaries all in one line item, and that would be okay. But what you want to make sure that you do then, if you do that here, if you add marketing team up here, you don't want to also add those individual salary positions down here. So just make sure you're not double counting. But if you decide to use the salary module here, you can enter in specific job titles, annual salary, annual benefits, what month they're starting on. So what month of the projection are they starting on here? So we said month 25, which would mean that they're starting, this position is starting at the beginning of year 3 in the model. And it goes through month 60, which is the end of the 5-year model. And then we can say what number of particular employee, how many of this particular employee do we have? So if you're hiring a particular position where maybe you're going to hire 2 or 3 of this position at the same time, all in month 25, then you could just change this to 3, and you could do that. And you can provide an annual raise percentage right here. And that will allow you to finish up your salary projections. Then the last thing here is if you're going to do an owner draw or an owner distribution, you can put in your projected owner distributions here by month. And that will bring us all the way back to our profit and loss at a glance tab, and hopefully give you a good view of what you forecasted based on all of this information. So with that, if you have any questions, there's kind of a lot here. And so please leave a comment in the comment section of the video below if you have questions, or reach out to us at support@projectionhub.com, and we'd be happy to try to help you work through this and create a forecast for your business. Thanks.